So one of my things that I've kind of come to believe is that unless you fail, you really aren't going to appreciate what it means to succeed. At least that's my experience. So this is one place I thought I would start. That I had this idea about 1990. I was taking a walk and thought, if I saved about $5,000 every year, then how much money would I have in 10 years? And I'd have $50,000 with interest. Well, I didn't exactly save $5,000 a year. It probably was actually less. But just by putting in my 401k and just by picking some stocks that happened to be in technology, it ended up being about $100,000 by 2003. And that's not too bad, is it? That's 10 stacks of $100 bills. That's right there. That's quite a bit of money. But something really weird happened in my head when I crossed through this $100,000 mark. Too many zeros or something. I suddenly thought I had to do something with it, when just collecting it was all I really needed to do at the time. So my position is I need to do something with this. And then I ran into these dangerous things. There's this book called, this game called Cashflow 101. And a lot of times in the game Cashflow 101, you'll get a card. It says it's a 2-3 house, down payment $4,000. It produces $200 a month of income. ROI is 48%. You just buy the sucker and it produces cash. What a deal. It's how real estate works, doesn't it? Isn't that right? Just buy any old house, you just get a good ROI, and you make money, and the realtor's going to represent you and let you know the right thing to buy. It's exactly how it works, doesn't it? And then we have this book called Rich Dad, Poor Dad. It really is very positive about how you can be rich in real estate. So I thought, I have my $100,000. I have to have more, of course. We always have to have more. So I'm going to have to do something about that. And pretty soon, because it's urgent. So I've learned a few things too along the way. There's these things called training organizations. And I'm not going to say who it was, but I went to one of their classes and it was free. And then the next one was $500, which was still not a lot of money. And the first thing they did is they wanted you to go ahead and see if you get your credit up higher. More credit. So we all did that. And then we played the cash flow game. And you won the cash flow game by borrowing lots of money to get stuff. Okay, that makes sense. And then they wanted to sell you a premier package for $40,000 to get training in buying real estate. Sounded like a good deal, right? Well, I didn't need their training. I'm pretty smart. So, but how many times do people come to GDREIA and they've already paid a lot of money towards a training organization and haven't bought anything? Has anyone ever heard anyone do that? Has anyone ever done that before? So that's a dangerous thing. So here's my situation. I have a lot of cash. I don't know anything about financial statements. And there's sharks that want to sell me education. Here's another dangerous thing. Sharks, if you're uneducated, that can be just as bad. There's this thing called dual agency. Anyone heard of dual agency? It's this concept that a realtor can represent the buyer and the seller. I'll guarantee you, if I hire a realtor to sell a property for me, they're representing me, not the buyer. So the correct answer is buyer beware. Because if you have a conflict of interest, you really need to be aware of things. So imagine you have a lot of cash. You decide you don't want to feed the sharks of education, but you're not going to have any education at all. Do you see any danger with someone who doesn't have a lot of education in real estate, thinking they're going to take $100,000 and buy something and make a lot of money? What about this issue of falling in love with property? What about not knowing what you should and should not buy? What if you don't even understand financial statements, or maybe you think you understand them? So that was my situation. And here's my result. How's that look? Pretty cool result, isn't it? I was so successful, I turned $120,000 of cash into at least $100,000 of debt. And I had some loser properties to show for it, which I've gotten rid of now. They're all gone. I have bought better things, a little smarter, because of networking and knowledge I've gotten from GDREIA. I came to this organization in 2010. I talked to Sham. I was in his office, and I said, I've really screwed up. And I have a mountain of debt. And I realized I'm really not that smart. So maybe if I hang out with people that are doing something correctly, I might glean from them how to do it right. And that's why I became the OPHP chair, which Kate is over in charge of now. Because I figured if I was in charge of the educational program, then maybe I might learn something along the way. So that was my idea. But I think I'm in good company. Robert Kiyosaki didn't know financial statements either. In fact, if you read some of his books on this mistake, he says that his rich dad threw him out of his office because he didn't know how to do financial statements. The other individual, which I've just forgotten his name, Dave Ramsey, he failed in real estate. He had a big, very large real estate holding, and it all folded on him, and he went bankrupt. And he had to dig himself out. So I figure I have some good company, which perhaps is a little bit comforting. But here was a problem. I could build an entire presentation on this one topic, which last year I did in a way. But I know some people have issues with debt, and this is one way to deal with it. I've never had anyone ever teach this particular thing I'm about to teach here. And I think the reason why it's not taught is there's no profit in teaching this. Except Dave Ramsey has talked about a major part of this. The first thing you really have to do if you're deeply in debt is remember that you have to provide for yourself and your family first. And that's the first thing. It's somewhat pointless to borrow money from A to pay B. Has anyone ever done that? You owe B some money, but you can't pay B, so you go over and borrow from A to pay B. Does anyone ever do that kind of thing? Anyone ever thought of doing that? Like, let's say you owe money on a credit card, so you borrow another credit card to pay that credit card, and you kind of move the credit around. So Sham's done that. The God of FICA really isn't all that important to you when you're deep in debt. Why on earth would you want to worry about your credit score if you're deep in debt? Why does it even matter? So I finally learned that I should just, actually I was forced into it because I ran out of credit and I couldn't meet the payments, so I had to stop paying people. So what I ended up doing, which is something unique to what I believe, is that you pay those who give you the best deal. Call them all up and you say, I'm in trouble, and what can you do for me? I'm not going to pay your interest rate, I'm not going to pay 18%. Can we have 2%? How many people think 2% is a good rate for a credit card? Or 1%? How about 0%? So let's say I talk to Steve over here, you're Mr. Creditor, and I say, Steve, I'm in trouble. Can we do something about the payments? I'd like you to knock the interest rate down to 2%. And you tell me, what would you tell me, Steve? You're Mr. Creditor, you're Mr. Mean Creditor, what do you tell me?
No, it's all right.
Well, Steve, I'm so sorry to hear that from you because you're not qualified for me to pay you anything this month because I have some debt with Sham Reddy over there, and he's offering me 0%, and I'm going to give him money, so you're below the line, and maybe we'll talk about it next month, and if you're willing to work with me, I might consider paying you. But what will probably end up happening is Sham's going to get all his money. Isn't that cool, Sham? This creditor is going to pay you everything he owes you over time. Of course, you're going to get 2%. You know what you're going to get, Steve? You get about half of it. So secretly, when people like Sham, say, okay, I'll work with you, I'm happy. When people like Steve say, I'm sorry, but you're going to have to pay 18%, I'm actually more happy, I just want to admit it. Because I know down the road that you're going to offer me a settlement, and I'm going to pay you half of it. Or you might decide to be nice and forgive all the fees and all the interest, and we'll be happy again. So I figured I would just put this slide in here because a lot of individuals don't know how to deal with predators when they get in trouble because no one teaches it because there's no profit in it. So what is Cashflow 101 really about? It's not about buying real estate. It's about financial statements. How many people have played Cashflow 101? Quite a few people. I play it once a month here at the Dayton area board of realtors. And I'm still learning lessons from it. It's a great game to play. It's all about financial statements. So after playing this game for quite a while, I kind of wondered maybe I should do a financial statement as well for my for how I run my own life. So I don't have a form. So guess what form I use? Anyone want to guess what form I use? Any guesses? I use the form out of the game. Well, it does have income, passive income here, and I actually have a little bit of that. I guess, like, if I want to be honest, I could put down negative numbers for it. I did have expenses. I could do that. I did have assets here. I did have liabilities, so it sort of worked. So, and the other issue I had is, anyone's married in here? You ever wonder if your spouse, what they were spending money on? And you know, if you start asking them, you know, you seem to be spending a lot of money on eating out all the time. Do you think they're going to respond to that favorably? Probably not. So it dawned on me that if I sat down with my wife of many years, and we started doing a financial statement together, and we just started reading through the checkbook and writing down everything we spent with a piece of paper and a pencil after saying, Burger King, $5, McDonald's, $8. Let the numbers speak for themselves. I didn't have to say anything. My wife said from the end, says, gee, it seems like we spent a lot of money eating out. So I thought if I had to say it, it just showed up. So I have to admit that one reason why I started doing this was because I was really wondering if my wife was spending money. But it was really cool because the next month, I got rid of the form. This is my new form. How do you like my new form? Can everyone understand this form here? Is that pretty clear? Yeah. Let's see. If you get paid twice a month, don't most people that get paid every twice a month tend to kind of pay the bills that are falling in that period? And people that get paid every 2 weeks, don't you kind of have this rolling pattern of bills kind of falling into a paycheck and then rolling out into a paycheck? And how many people get paid once a month? Then there's another pattern there. So how on earth are you supposed to get a form that works every single time? Because the people that do the every 2 weeks, the mortgage is going to work its way through it. During the year, you're going to have a month with 2 payments in it. Actually, you're going to have 2 months every year where you make the mortgage payment twice. And you're going to have 2 months every year where you pay it not at all. I finally figured that out. So a lot of the forms people give you are not going to work. So I came up with this form. That's a blank sheet of paper, and you just kind of make it work. Actually, what I did is it kind of looked like this, but I just drew it out there and scribbled on it. So this is what should be on your form. You should maybe put the date in the upper right-hand corner so you know when you did it. I think that's a good idea. Everyone with me on that one? Put the date in the upper right-hand. Well, okay. If you want to put it in the upper left-hand corner, then that's valid. So then, what you do is on the left side, you're going to put all your cash, all your assets, whatever they are. On the right side, you put all your debts, and then you subtract all your subtract from your asset value all your debt, and then you get your net worth. Does everyone follow that? Let's say that one more time. You add up all your assets on the left side. You add up all your liabilities on the right side. You subtract the liabilities from the assets, and you get your net worth. Does that seem pretty simple? It's A minus B equals C. A minus B equals C. And I have a handout that Steve's going to hand out to you. So that's what it basically is. But assets are different. What kind of assets do we have? Can someone name an asset? Any asset. Property. I would call that a non-cash performing asset. That's the technical term because those could be different. What else is an asset?
Bank account.
Cash. That's cash. That's an asset. Any other asset? Stocks, bonds. Those, I would call those cash. IOUs as a non-cash asset because you can't get it. Anything else? What about your house? I call the house a non-performing asset because you could sell it. Your car, non-performing asset. So I came up with this form. Now, if you look at the handout, you can't use my forms, can you? See, I kind of messed you up because it's only on half the page. because it's a PowerPoint slide and there's words in the boxes. So you have to kind of get a piece of paper and do your cash assets first. Now, the way I do my cash assets, anyone do online banking? I just know my bank account, and I look at the previous month's financial statement, because in the previous month, I already wrote down all the names of my bank accounts. I went through that once. So the next month, I simply need to go and fill in the numbers from figuring out last time, because you have to figure out where all your money is. I don't know about you, but I have a ton of little accounts. I have the emergency fund, I have a checking account, I have all kinds of things, all the IRA cash accounts. Those are all cash accounts. So I simply add them all up, and over time I've kind of broken into little categories, because these are the ones we can use anytime we want. These are the ones that are for other purposes. So I kind of put those all in there. Now, real estate, I do own stock in an LLC that owns an apartment building. So I can't grab that money anytime I want. So that is an asset, but it's not one I can just grab. So it's in this little block right here, because I can't get it. And of course, does anyone remember what Robert Kiyosaki calls non-performing assets? Doodads. Does anyone like the word doodad? Doesn't it kind of sound insulting? Why are you calling my car a doodad? It's an asset, but it doesn't perform. Well, okay, if you have a high-powered car, yes, your asset does perform, but just not financially. So that's basically my form. So I'll give you an example of it. How do you like my example? Can you read that really well? Something I want you to know is that the financial statement is for your benefit. It doesn't need to be a published report. And if you have a computer that simply generates a financial statement, how much learning do you get from that? You don't. But if you have to get your piece of paper out, see a nice piece of paper, and you have to do something like this on it, you might learn. So what I basically did, it's kind of, you can't read my writing, that's fine. And this is one sheet of paper, but I just put, it won't fit on the slide nicely. So I just laid out all the cash stuff that I had, and I put a number down, and that number is $19,363.59. So all my cash accounts, I have Northwest Savings Bank, I have a CAMA account, which is a self-directed IRA. People know about self-directed IRAs. It has some cash sitting in it. I have my Right Pat checking account, though I can't touch that money exactly because we're using cash mostly. This is a flexible spending account. This is our savings account. This is an investment account, because if I go and to Frisch's and have lunch with somebody, to charge out of something so I can track it as a business expense, et cetera, some number. So how many accounts is that? 1, 2, 3, 4, 5, 6, 7, 8. 8 accounts. So how many forms have exactly 8 lines for your cash account? Anyone seen that form? So what if I give it to Steve and he has 3? You have wasted space. So don't use a printed form. Just write out yourself. There's my LLC. I had $20,000 in it back in December. So there's my non-cash. And then, oh, I did use that word doodad. I apologize, but you can't read it. I started thinking doodad's a bad name. And my house is worth $210,000. My cars are worth $9,500, and then I have other stuff of $20,000, which comes up to $231,500. You know, it's funny how every single month that number is the same. So I just keep writing this thing over and over again. Then I decided to depreciate my car, because do my 4 cars or my 3 cars are they still worth $9,500 a year later? Is that right? That's right, isn't it? So I decided I had to figure out how to depreciate them, but I like this number of $231,500. Any ideas how you fix that problem where you don't want to change the number, but you want to depreciate your car? Any ideas? This is a big problem. I don't want to change the number. I mean, I've been writing this number down for 2 years. Definitely don't want to change it. Come on, they're smart people. How do you solve this problem? Any ideas?
Another asset.
Pardon me?
Buy another asset.
I just figured I'd appreciate the value of my house. So I just made the house worth more, and I made the car worth less. So that's solved that problem. It's just a number I made up. What's your house really worth? Probably not worth it what I think it should be worth. So I basically So that's all my assets. Now my liabilities, I had a mortgage. You have a mortgage in your house. So I figured my mortgage plus my non-secured debt of $7,232.88 came to $163,593.18. So I simply, I forget how these work, so I actually draw a little line and say, oh yeah, this goes here, and that goes here, and I get a number. My assets minus my liabilities is $95,233. That's what I'm worth. That's not a bad number for your net worth, is it? That's what it was that month. I figured out that from the last statement, my net worth previous month was $3,494 less. Isn't that kind of cool that I increased my net worth by $3,494 in 30 days? That's not bad, is it? Now, it takes me 20 minutes to do this. Don't have to think about it. To do this. Now, imagine you work through the whole month and you want to know how much do I really have left at the end of the month. So I sit down with my computer and I get out last month's financial statement. I get my pencil out, put the date in the upper right-hand corner. Okay, we fought a religious war. You put in the left-hand corner. I'll go for that. I just ratchet out all my assets. I ratchet out all my liabilities. I come up with a number. I look at previous month's number and I see how it changed, and usually it's bigger. Because every time you pay down that debt, what's that do to your net worth? It goes up. Every time you pay that mortgage and you pay more of the principal down, what happens? Your net worth goes up. Financial statements are fun, and if they're so easy, why not do them? So after doing this for a year or so, I thought, oh, by the way, if you have a whole bunch of creditors, it's kind of hard to keep track of who they all are and how to get a hold of them, where their website is, and everywhere, and update all the balances every month. So when you have about 10 credit cards, if you simply create a spreadsheet and you put the name of the credit card and the URL address, and maybe you code a secret password into your spreadsheet, you can go through all your credit card accounts and figure out what all the balances are, so you can get a number for all your debt. Because if you have 10 credit cards, do you ever lose track of how much you owe in all of them? And isn't that how they can kind of sneak in the 18% interest here and there? Has anyone ever had a credit card company where it's 2% this month, and then very quietly it jumps to 18%, and you're wondering what happened?
Bank of America bought out NBNA.
Oh, I have all kinds of stories about the game between creditors and creditees. So I found it really easy is that every month I decide how much I'm going to pay them this time. So I kind of go through it all and check up on them. And if their rates go up, I pick up the phone and say, can you tell me what my rate is today at 18%? Well, it was 2% last month. Well, what happened? Oh, we were bought out by the bank, and we don't have to honor an agreement. Say, oh, I'm so sorry to hear that. Well, I guess I don't have to honor paying you either because I don't like your rate. No. How are they going to argue with that? Say, well, I just don't like your rate, so I'm just not going to pay you. Sorry, give me a nicer rate and we'll talk. So it's really helpful when you have a lot of debt. You need to track it, so put it in a little spreadsheet. So when you do this fancy financial statement and you want to put the debt number here for how much your credit is, you can just copy it over from the spreadsheet. That's how you do it in 20 minutes. One day I would go through the spreadsheet, and I used to color code them. Like I would make them all clear, and then as I got on their website and figured out the balance and figured out everything was cool, I changed them to color green. So I'd work through them all and make them all green. And if I need to call anyone, I'd just call them on the phone. If they called me, I always call them back. Anyone know who Linda is from Capital One? Anyone know? Tell me who Linda is. Does anyone know who Linda is from Capital One? She called me every day. She's not human. So I would call Capital One and say, Linda called me. Can I talk to Linda? Well, who's Linda? Well, she calls me every day. I'm just returning her phone call. Well, then she finally dawns on the person in the line when I'm talking about their automated caller. It's like, oh yeah, I just want to talk about it, how things going. What's the rate? Oh, I'm sorry, still don't qualify for payment, so we'll talk a few days from now. And I try to make it fun. maybe they thought it was fun too to have some crazy person calling them and being funny about talking about Linda. So that's how I got through that, kept my sanity. So this is where it got kind of fun for me. This wasn't too fun. Hey, my net worth is what, negative $17,000. Woohoo! I remember one day we got to zero. I'm worth nothing today, but we sold off some real estate that crashed through. And I remember when I broke even, my net worth equaled my debt. And this here, any idea what that is? I sold property, and doesn't anyone think that property's worth something, and the person buying it thinks it's worth something else? I put this on my wall at work, so I get to stare at this little mark here. I don't know if TV does it. But back in, what's this, January, my net worth had climbed to $95,000. That's not bad, is it? That's a little better than negative $17,000. Do you think $95,000 net worth in 4 years is better than negative $17,000 net worth? And then I started trying to track my cash supply because I had a 401k and I was tracking that. And one day my cash exceeded my debt. Isn't that kind of cool? You have more cash than debt. And you see where this is headed towards zero. So, but the thing is though, if you keep doing something every single month, you ever change it up or make it better or improve it, you won't ever do that? Well, I got a little fancier. Why not have a 12-month moving average? Stocks do that, why can't I do that? So basically, and after a while, this thing becomes hard to read because this is like 4 years of stuff and everything keeps getting smashed together more and more. So I decided to just do 12 months. So here's the event of selling my property, and you see I'm recovering. And anyone want to guess what this is here? I'll give you look at the date that occurred.
Federal tax.
But any idea why I got federal taxes of like $8,000? I sold 2 properties. I'm at zero, and now I got debt again. Well, you can see it went up. Oh, look at that. You notice I was above 100,000. What happened? I'm back to $98,000. What's this $98,000 bit? So now, anyone want to guess what August looked like? What do you guys think? Oh, by the way, this I started calculating how well I'm doing across the current 12 months. I think it's kind of motivational to see what's my net worth increase over 12 months. I didn't put the August slide in here because I think it looked too good. It jumped to $17,000 of net worth increase in 12 months. You think increasing your net worth by $17,000 in 1 year is not a bad deal? That's kind of good, isn't it? Now, one of the things I tried to figure out where that came from, one area it came from is I bought into a deal with another GDREIA member, and after I gave him $20,000, I got a check back for $2,200 within the year I bought it. So that $17,000 you can't see up here, $2,000 is passive income. By the way, what's a car cost? What do you have to pay for a car in a year? Do you think you could maintain a car for $2,000 a year? Possibly. So, it might not be a great car, but could your budget for a car be $2,000 a year? Possibly. You don't drive a fancy one. I realized that just the fact that I had $20,000 that I parked in an asset that's producing cash could potentially pay for all my future cars. It's kind of cool, isn't it? It's kind of neat to actually see that happen. There's my numbers. Then I decided I was doing financial statements. I kind of thought maybe I should go to this Dave Ramsey. You ever heard of Dave Ramsey? He's a guy that says you should never borrow money to buy real estate. So he must not be worth listening to, right? Because he's always against borrowing money for real estate. So I figured maybe he knows a little more than I do. You see, I've realized I'm not so smart anymore. So if someone, and it's really cool about Dave Ramsey is, where does his university usually meet? If you want to go to a Dave Ramsey class, where do you think you might end up at? A church. So we realized Dave Ramsey has a subsidized business. Isn't that a cool business model? He has a for-profit business that has volunteers that run his classes for him. That's one reason why his class costs $99 for a 6-week class. How many people offer a class for 6 weeks for $99? You don't find those really very often. Now I do know that some of the professional speakers we have to come here to speak, their packages are really worth what they're charging, because we would not bring them into a GDREIA meeting if we didn't believe in them. And most of them, what's their guarantee on most of our professional speakers? What's their guarantee on most of them? It's usually 100% money back satisfaction guarantee. If you're not 100% satisfied with the package, you get your money back. My jaw's kind of dropped after one of these expensive training courses. Like want to charge you $40,000 and you can buy a package from speakers here for $1,000. So one thing we did is, does anyone do a monthly budget? My wife does it, and we get paid every 2 weeks. So this is our budget. She does a great job on that. I wish she was here so I can compliment her on it. But she sits down and she projects the budget out. And this is our budget from July 18th, August 1st. And she wanted to put $50 in a Roth IRA. And the mortgage is here, the fuel's there, the direct TV, Vectren. These are all checking account, online stuff. These are all cash things here. Groceries, $450 in groceries. And one interesting thing about, oh, by the way, I'll show you the next 2 weeks is different. These are different, aren't they? Notice that hardly nothing on this slide is on that slide, except this stuff on the right. So that's why the forms don't work, because it always changes. But how many people believe that if you use cash, your spending is different? How many believe that, oh, you spend the same if it's cash or not cash? Well, no, everyone's quiet. I'm not going to admit to that. I'll give you a little example. I use this envelope from Dave Ramsey, and I want to buy tires for my car. Anyone want to buy tires for your car? And I want to buy really good tires, because my tires on my car would be about $600 for my beat-up car on the nurse. So I'm saving money for it, and I now have 2 Ben Franklins here, right here, for my tires, and I'm getting another Ben Franklin maybe next payday, so I have 3 of them. And hopefully by October, I'll have 6 of these things, so I can buy my $600 tires. So now that I have $600 in cash, and I kind of like my Bens. I don't like Ben. They sit in your envelope for a while. You really don't want to let go of your Ben. See, I'll go to Grismer Tires. They'll give me a 5% discount if I use my debit credit card there, so I'll just get that 5% back. Everyone thinks 5% back's really cool. It's cool to get 5% back. But a guy that I know said, you can sometimes go to a junkyard and get a brand new set of tires for maybe $25 a tire and already balanced for you. You mean, my car is kind of beat up, isn't it? Well, can I possibly go to a junkyard and get 4 tires for, say, 1 Ben instead of 6 of them? I can keep my little Bens in my little envelope and not spend them. So maybe when something breaks, I can just pay for it. That's an example of how you mentally think about cash. If you save for something, you think you might shop around for a good deal. So I just thought I would share that with you, but I've told you that my spending habits changed a lot when I started using cash. So when I go to the gas station and buy gas, I usually pay cash. I just like to suffer a little bit. I say goodbye to my Ben Franklin if I have one. Bye, Ben. It was nice knowing you. I'll never see you again. I get this gas for giving you up. It's more painful to let go of cash. Credit card. Remember the Visa commercials? Everything's spinning around. Zip, 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 zip. Money going away, money going away, money going away. Someone's getting rich and it's not you. So think about that when you think about using credit. So there's my envelope system. I really believe in it. So you end up noticing that you end up having more cash all the time if you spend cash. Isn't it kind of nice to know you always got a handful of money? I've got probably maybe $400 in this little carrier here of stuff that I buy. It's kind of nice to have $400. And lastly, this is my last point. I learned a lot from Dave Ramsey's class, and my final point is, what's the point of investing in real estate if you don't know how to manage what you already have? because if you're not doing financial statements and you don't know where you are, then why buy real estate? Because to buy a piece of real estate, that real estate has a financial statement. Don't you want to know if you're making money or not?